Having some technical difficulties here this morning. Gotta love it. Gotta love it. Let me fix this real quick, and then we're gonna get back to the analysis of the day. All right. I think I'm good. I hope. It looks like things are working the way they need. We're gonna see. All right. How's the audio? Can you hear me clear? How we sounding? Flash manufacturing PMI, flash services PMI. So that's what's going on as far as news today with the United States dollar. Oh, and it says Richmond Manufacturing Index. Okay, so let's look at what all this means, right? So flash manufacturing PMI. What does that mean? Let's get ChatGPT up in the building. So, what is flash manufacturing PMI? And how does it affect the US dollar and which ultimately affects the gold futures market? All right, so right now we're just looking up the news, right? We're seeing what's going on today and what could possibly bring some volume to the market for us to capitalize on. So I looked at the calendar. It says today around 9:45 a.m. There's some news coming out saying flash manufacturing PMI. And I looked on ChatGPT to see what that means. And it says, what is it? It says PMI stands for Purchasing Managers Index. Every month, purchasing managers at hundreds of manufacturing companies are surveyed about new orders, production, employment, supplier delivery times, inventory levels. The responses are combined into one number. How to read it. So if the PMI is above 50, then it says manufacturing sector is expanding. So that means like business is doing better and you know, basically, uh, yeah, like business and commerce within the U.S. is doing better. And then if it's below 50, it says manufacturing sector is contracting. So that would be the opposite. And then if it is 50, then that means it's no change. So the word flash means it's a preliminary estimate released about 1 week before the final PMI report. Okay. So it says because it's early, markets react to it immediately. Okay, so it says about 1 week before the final PMI report. So let's go back. Let's go back. How do I go back? All right, let's just open this up on the browser. Forex Factory. That's the news source that I'm using to like see what news is going on and what it means. Okay. So it says 1 week from now would be the final PMI, the final manufacturing PMI. 1 week from now, because this is the flash manufacturing PMI. So then 1 week from now would be what? If today's the 23rd, that would be the 30th. Let's see. The 30th. Okay, so maybe not exactly a week. Yes, there we go. So it won't be the 30th, but it'll be Wednesday, July 1st. So it says final manufacturing PMI and then ISM manufacturing PMI. So that's like important news that the United States dollar, the value of the United States dollar is dependent upon. And why the United States dollar matters for me is because I'm trading the United States gold reserve, and the value of gold within the U.S. reserve is dependent upon the value of the United States dollar. So things that affect that is interest rates, inflation, whether or not commerce within the U.S. is expanding or contracting, which is why the news going on today is important. So, okay. So today is what? Tuesday, yeah. So it says flash manufacturing. So let's finish reading what that means. All right. So why traders care. Purchasing managers are among the first people to notice changes in business activity. If manufacturers suddenly receive more orders, they buy more materials, hire workers, and increase production. This often happens before GDP, employment, and earnings report improve. That's why PMI is considered a leading economic indicator. So it says, suppose economists expect a forecast of 49.8. So basically what that number means again, right? So what that number means is the overall number that's represented by what these purchasing managers are being surveyed about. So new orders, production, employment, supplier delivery times, inventory levels, all of that is measured within one number. So it says how to read it. If that number is above 50, then that means the manufacturing sector is expanding, or basically that, business is doing good, and, they're projecting business to get better. But if it's below 50, then that means business within the U.S. is declining and, going towards the downside. So if it is 50, then that means no change, and whatever the report, this specific report That means that if it is 50, then that means there's no change in the previous. So it says example, if the forecast is 49.8, so if it's 40, if it's so okay, so if the number of this report is projected to be 49.8, but then the actual number is 52.1, ChatGPT is saying that, you know, it's considered a big surprise within what was forecasted and what the actual is. So like certain news comes out and that's how the market reacts. Like it doesn't react to the market directly. It reacts based off of what was expected and what actually happened. So for example, for the PMI that's coming out today at 9:45, the forecast is 55.6. So at 9:45, the actual number will come out for this report, and depending on whether or not the actual number is greater or larger than the forecast, will give people anticipation on how the market will react. So as far as this specific report, it says, why does it strengthen the US dollar? It says higher interest rates usually attract foreign investment. Investors buy US assets like treasury bonds, stocks, and money market funds. To buy these assets, they first need US dollars. More demand for dollars generally means the US dollar rises. Damn, okay, that makes so much sense. So it says higher interest rates attract foreign investment. So higher interest rates. Yeah, so like if the interest rates within the US rise, then foreign foreign investors would want to basically invest in the US dollars, because higher interest rates means that basically that the US dollar will make more money for itself because of interest. So if interest rates rise, that's a bad thing for the consumers, but it's a good thing for the people who are basically supplying the products and, you know, basically controlling the dollar. So if interest rates get higher, then that means foreign investors want to buy things like treasury bonds, stocks, and money market funds, because they know that the US dollar is rising. So, but to buy these assets, they need to convert the money they do have, because they're not from the US. They need to convert the money they do have into US dollars. So, more demand for US currency would mean that the US dollar is rising. So it says, why is a stronger dollar detrimental to gold, right? So why does it matter if why does it matter if the value of the dollar rises or lowers? It says gold is priced globally in US dollars. When the dollar becomes more expensive, a European investor who could previously buy 1 ounce of gold for 2,000 euros might now need 2,100 euros, because the stronger dollar makes dollar priced gold more expensive in their local currency. Damn, I need some water, bro. All right, so let's read that again. Why a stronger dollar often hurts hurts gold. Gold is priced globally in US dollars. When the dollar becomes more expensive, a European investor could buy 1 ounce of gold for 2,000 euros, might now need 2,100 euros, because the stronger dollar makes dollar priced gold more expensive in their local currency. So demand can weaken, which often pushes gold prices lower. So, okay, so let's understand this, right? So, boom. If the actual is, so boom. So the forecast is 54.6 for this number. So right now, basically they're forecasting things to be lower than what the previous report was. So the previous report was 55.1. And as far as the market goes, and the people that are interested in the US dollar are forecasting that the number will go down, because the previous number was 55.1. So how to interpret this news, right? So if the forecasted number is higher, if the actual number is higher than the forecast, then that means business is stronger than expected, economy is improving, inflation pressures will increase, and the Federal Reserve may keep interest rates higher for longer or become more hawkish. So basically, if the actual number that comes out for this report is higher than what the forecast is, then that means business is doing better than expected, and we can anticipate inflation to rise and interest rates to go higher as well. So if inflation and interest rates go higher, then that means that the US dollar is getting stronger. And if the US dollar is getting stronger, then that means the value for gold. Let me make sure I'm reading this correctly. So boom. So that means the US dollar rises, and then it says when the US dollar becomes more expensive, it's more expensive for a European investor, so someone who doesn't have United States currency. So it's more expensive now for a European investor who could previously buy 1 ounce of gold for 2,000 euros, would now need to buy it at 2,100 because the dollar got stronger. So if the dollar gets stronger, that pushes gold prices lower. That makes sense. So it says interest rates matter too, because gold does not pay interest. So when rates rise, the bonds pay more, savings accounts pay more, and treasury bills pay more. Investors may shift money out of gold and into interest-bearing assets. Okay, that makes 100% sense. So it says owning gold from the US Reserve, it doesn't pay interest. So when interest rates rise, that means interest rates on bonds, on savings accounts, and on treasury bills, which are all just different types of investments. They might want to move their assets into a different investment, basically. And if they're moving their money into different investments, then that would also make gold go down, because people are no longer interested in gold because it doesn't pay interest. So that is another reason gold often falls when PMI is much stronger than expected. So if they said the forecast is 49.8, and then they said, for example, if the actual is 52.1, so what is that? That's 0.2 and then 1.9. So no, wait, that's wrong. 0.2 would make it 50, and then to get to 2.1, so that's 2.3. So if the actual was 2.3 points larger than the forecast, and they called that a big surprise, right? So boom, if the forecast for today's report is 54.6, they're already forecasting it to be less than what the previous report is. So if they're reporting it to be less than the previous report, that means that the US dollar, basically, the value of it would be going down. And if the value of the US dollar is going down, that means the value of gold will be going up. Tell me y'all picking up what I'm putting down, or at least my understanding of it. And what's actually not surprising is the fact that I was just looking at the higher time frame, and we are at all-time lows since November of last year. So we are at all-time lows since November of last year. So you know when you get to lows and lower lows, there could be liquidity there to help push price back up, right? So a low could also be a type of support or demand zone, because so look, as we can see here in this zone, right near where this line is. So let me zoom out here. So the last time we were at this low of a point, I went and I looked, and it was, it says 10/28/2025. So that's around Halloween. So this was the last time the value of gold was this low. And we went all the way up, came all the way down, and now we're downtrending, right? And now we're back at the lows since November 2025. And actually, since then, we started going on an uptrend, right? We started seeing a lot of buying pressure, until now the value of gold is lowering because the value of the US dollar and interest rates and inflation overall has been rising. So the news and overall, how would I call it? Like world, the world news is, you can see it in real time how it's affecting the market. So with that being at 9:45, we let this market open. Around 9:30. 9:45 is the next news event going on here, and we got gold on the chart. I got my chart open here as well on my execution platform, right on Top Step, and we're here on Trading View as well. So we're gonna see how the news affects what's going on, and it's raining outside today, man. Really gloomy. I'm really glad I didn't work today. I thought I was supposed to work today, but they gave me off. They gave me off on a Tuesday. All right, we got market open here, and we got the first 15 minutes of the market starting here. All right. All right, now I'm just gonna mark out the volume of the previous market session, and then it'll also show the volume of last night's session up until now, and we're right about the point of control here. in gold. So basically, what this is showing me right now is that, so it's showing me volume at specific prices, right? So it's showing me at what price were the most orders being converted, um, like in the market. So this tool is showing me at what price was the most volume, and then this tool at the bottom is showing me at what specific time frame is the most volume kicking in, right? So it's showing me, okay, this is an area where volume was at its largest, and down here is showing me at what times, right, or what specific candles. So looking at the market right now, we had price during overnight, so very early this morning, it tapped into this red line, right? So this red line is called the value area low. So like the value area will be between this level here and this level here. So basically the value area is where the most volume within a session occurred, right? So within this session, we reach the value area low, and at this value area low, we see buyers step into the market and break structure here, right? So why is that significant to me, right? So let's get our setup. So we had price come down and break these lows, right? So reaching new lows shows us liquidity has been swept in the market. So we're gonna mark this liquidity here, right? Boom. And then we had price come up and break structure right above this candle here. Right above this candle. Boom. So now we can mark our breakout range, right? So I'm gonna mark it above this high here. So there's our breakout structure, right? So now we have our breakout zone. So we can mark this zone here. As our breakout range, right? And now we can see in real time where price swept down, filled the orders needed, basically grabbed the fuel needed, came all the way down to the lowest point. And what this volume tool is showing me is that there wasn't a lot of orders, or there wasn't a lot of volume that occurred at these price points, right? So at these price points, price was just searching for a point where buyers, as you can see at these price points, buyers stepped into the market and was able to push price back up. And then more buyers stepped in at this price level, as you can see, right? Because what happened? The buyers that stepped in at this price point only had enough fuel to push it here. And then what do you see? Price came back down because the buyers didn't have enough pressure. So now price came back down, and what do you see over here at these price points? Right where this red candle is. You see more buyers step into the market, and it was able to push price up to break structure and push past all of the volume here at these price points and create a new high. So what does that mean? That means that there were a lot of buyers that stepped into the market here. And then now what do we see in real time? We see price come back into this zone where this tool is showing us buyers stepped in. It came back into this zone and is now helping push price back up. So in order for me to get into a trade, I would like to see price create a new high and close above this high here. And well, really, I'm actually waiting for this candle to close. So once this candle closes, that'll give me the signal I need, because what is this candle showing me, right? It's giving me the candle confirmation that I need. It's showing me the buying pressure stepping into the market from this zone. So we see these long wicks, right? We see the long wicks or the long line showing that price came down to these levels, but the buying pressure was so strong, as you can see with this volume tool, right? This is showing volume. So because of the buying volume being so strong, it pushed price up before it could maintain these price levels. So boom, now I'm gonna go into my 5-minute. Now on my 5-minute, we got the candle confirmation right here, right? And I am a little late getting into this trade, so we're gonna let this candle close, and when I do get in, I am going to place my stop loss right below this low here, right? Because if price does come here and outpass all of the previous volume that stepped in, as you can see, then that would invalidate my trading, like my trade plan, and show me that the buying pressure that I seen was not true, right? So we're gonna hold on for this candle. We got about 1 minute and 30 seconds. And now what is this also in line with, right? This is in line with the news that is coming out. So this is important, right? So once this candle closes, this 5-minute candle closes, it'll be 9:45. At 9:45 is when this news comes out. Let's see. Boom. 23rd, 9:45. So when this news, oh, see, yeah, there we go. They got the countdown already. So in 1 minute, the countdown for this news is going to come out. So if the actual number is bigger than the forecast, then that will show good signs that the U.S. as far as commerce is in a good position, right? Things are going good, businesses are expanding, so forth, and going on. So that means the U.S. dollar will be rising. Now, if the U.S. dollar is rising, that means gold will decrease, right? So that's why this news matters, because my setup is a bullish setup. So it has intent that price will go up. So in order for the news to align with my setup, I would need to see this actual number. I would need to see this actual number be less than what the forecast is. So let's let the news come out. We got 5 seconds here, and we're going to see how the news coming out affects the market. We're going to let this whole 5-minute candle play out before getting into a position, just to let the volume, oh, it was greater. So it being greater than the forecast, and it was actually greater than the previous, right? So that's a surprise. So now, as far as anticipation goes, this would mean that the US dollar is getting higher, right? Because business is doing good, things are going great, so forth, and so on. So that means that the US dollar is getting higher, right? So after this 5-minute candle here, depending on what type of volume comes into the market and what reaction we get to this news, will show us how we will get into a trade here. But so far what this news means is that, yeah, look, it says traders look for bottom in gold, market talk. That's just a small news update from TradingView. So, yeah, so now that we see the actual is greater than the forecast and is actually greater than the previous doesn't really matter, but it is something to reference. What really only matters is the forecast and the actual. So what's forecasted for this report and what actually happened in this report. So, yeah, so after this 5-minute candle closes, I'm going to see what the volume is looking like, depending on the news that came out. Basically, the news that came out is showing that the U.S. dollar will grow, and if the U.S. dollar is growing, then that means the value for gold is supposed to diminish, right? It's supposed to decrease. So, depending on how the volume is coming into the market here will show me, what move I should make. This last 15-minute candle here had strong volume to the upside, right? This candle here. So this was a confirmation I needed for a bullish move, right? But because of the news that just came out, I'm just going to be a little more patient and just see how the market reacts to the news. It may take 5 minutes, it may take 15 minutes. But what will let me know is a valid reaction to the news is the volume, right? Whether that's to the upside or the downside. Y'all picking up what I'm putting down? Let me know what your let me know what the level of understanding is for you guys. I hope you guys are understanding my outlook on things, and helping you guys get a better understanding on things. If there's something that you're not understanding or that you have questions about, don't be scared to ask. I'm here to explain. I'm here to learn with you. I'm learning as the day goes. Not even just as the day goes, as time goes. I want to show you guys something, man. Yesterday was just a bad day overall. I was doing dumb shit, bro. I just need to lock in. But yeah, last week was a better week, right? I finished last week in green, about $1,200, and because of my stupid decisions yesterday, I lost a lot of that profit that I made, right? So right now, I'm just focused on being better and taking what the market is giving me today, right now. Okay, so look, great thing happening right now. We're seeing new highs being created, right? We're seeing a new high being created, and it's above a point where price tried to go back up and got pushed down, and then returned to this level and got pushed down as well, right? So right now what I am anticipating is because overall gold is in a bearish market structure, right? So we're making lower highs and lower lows, lower highs and lower lows. So what I am anticipating is for price to reach a new high and close above these highs. Maybe it doesn't need to close, maybe this wick and just overall price even reaching this point was enough to give it the fuel that was needed. But I'm looking for liquidity to be swept here at the top, right? And then for selling volume to kick in here at this high, because although this setup I have here is a bullish setup because we have liquidity being swept to the downside with the break of structure, right? And then we have a return into this zone where more buyers stepped in. So this is a bullish setup, right? And if I did get into this setup, I would be a little in profit. I would have made a couple dollars. I would still be in profit at the moment, but I believe this move is, a move for fuel to be grabbed or fuel to be gained for the continuation to the downside, right? Because on the higher time frame, this could be just the pullback. Just a pullback, a slight pullback needed to continue the downside movement. Yeah, we are bearish right now in gold, right? So, boom. Okay, so look, this setup is actually playing out very well, right? So if I can get a close above here, I'm gonna try to sell at the high, right? So at this high, I can expect, some type of selling pressure to kick in because we had price and volume kick in here on the downside. And as it went down, it pulled back again to this area to push down. So I'm anticipating some type of selling pressure to be present, when this candle closes. But right now the buyers are in control. Oh, so yeah, I'm anticipating price to come within this zone here of about where it is right now to this line. So this line here would be called the value area high. So basically, this is a tool to show volume at specific prices, right? To show where the most contracts or orders are being converted at specific prices. So why is that relevant, right? It's relevant because it shows that, like, it shows where the most orders or the most contracts are being traded, and then it also shows whether or not the buyers or sellers were in control of that those specific price points. And then this tool at the bottom shows volume at specific time, right? Another headline here. So gold falls 2% as rate hike bets boost dollar to 1 year high. All right, let's refresh this here. 9:45. All right. Okay, we're getting some good buying volume step in here. We're seeing the buyers step in. Um, we're gonna let them do their thing, right? Because we know this needs to happen in order for selling pressure to kick in, right? Price needs to rise for sellers to be interested in selling. This was a very nice bullish setup. I just didn't catch it early on. And I would have been able to catch it here, right? Because this is the candle confirmation needed within my setup. But by the time I had the chart pulled up, we were already at this point, right? And this point is not a good point to get in because we see here previous at this level, there were sellers that kicked in. So we're going to let them do their thing and finish exhausting this buying pressure. And hopefully we can get some sellers that react because we created new highs, right? We broke structure here. Um, Hopefully we can get some sellers to react and bring some volume into the market, especially because of the news that came out showing that the US dollar will be growing. And when the US dollar grows, the value of gold goes down. And then even if we zoom in onto this tool here, right, we can see where price is and how it's reacting to these zones of volume, right? So within this volume, we see that the sellers are in control of this specific price level by 459 contracts, right? So in order for price to come reach up to this next demand zone, we would need to see buyers step in to fulfill some of these sellers selling contracts. We got this 15-minute candle about to close here. I see a strong wick on the upside, right? Showing some selling pressure kicking in, which is a good thing. And then looking at my volume tool here, we're also seeing some good selling pressure step in at this level, right? To hopefully have price come back into this zone of high volume, right? And if the sellers are in control of this high volume area and we have sellers stepping in where price is currently, we can anticipate price to be carried through this high volume area because of the sellers that are in control of it. Are y'all picking up what I'm putting down? And here we are, right? We got this 15-minute candle that's about to close, but it's going to have a strong wick on the upside. And why is that? Because if we go into the 5-minute candle, we see some selling pressure already stepping in. Now, what we would like to see is this candle that will close in about 2 minutes. We would like to see this candle gain some volume, right? Hopefully to match the buying volume that was here. We would like to see it gain some volume, and then we would like to see it engulf or basically oversize this previous candle here. But it looks like we have some indecision at this level, right? The body is getting skinny and we're seeing a long wick. So price wants to go down here, but there's still buying pressure here that wants to push price up. So we're gonna let those buyers finish doing their thing. Put it on a bigger scale here. Okay, look, we're seeing some buying pressure step in here. But then what do we see here? Right above this level, right above this, what would be a resistance level, right? We see that sellers are in control of this specific price point by 1,117 contracts, right? So price is going to continue rising, but like I was saying previous, right? Just based off the price action alone and not because of the volume tool. Just based off of price action alone, you can see that this is a point where price tried to go up, but it wasn't able to because of the sellers that were present in the market. Then what do you see? More selling pressure. Then we had a regular pullback followed by even more selling pressure, right? So right now, this is the pullback going on because of all the selling that has been going on in the higher time frame, right? So this is the pullback needed. We need this to happen. We need it to come back up, exhaust these buyers, right? Exhaust the people here that wanted to buy at these levels. So that way, the sellers that are in control at these levels can step back in and push us past all the buyers that previously stepped in. Time will tell. Yeah, look, it looks like we're getting buyers that will get us through this little zone here, right up until the buyers kick in at around 4160s, right? Or 4165s. Anywhere from 60s to about 70s. So 4160s to 4170s, I want to see some selling pressure kick in and us get a candle confirmation to the downside to show that price wants to continue its higher time frame trend or direction. Okay, so look, in this candle here, we had some indecision, but the sellers were in control. Sellers were in control. Yeah, they were in control by about 1,500 contracts, and the overall volume was 2,500. So that's some good selling pressure. Not what we have wanted to see, right? We have wanted to see it rise above the average selling pressure. So basically, what this line is showing is an average of the volume in the market. So basically, what is the average amount of contracts that are being traded at a specific time? And if for whatever reason we see a volume bar go above that average, it's something good to reference because it's showing that there is true volume stepping into the market, right? True volume that will give price direction because it's higher than the average volume being traded within this specific time frame. So I'm not sure if you guys can hear, but I'm mentioning volume a lot because volume is literally showing you the orders and the people that are trading in the market. The market is made up of people, right? The market isn't the market unless there are people to trade, people that want to buy, people that want to sell. So when you have multiple confluences or multiple things that give you an idea of what the overall volume is, that will help give you a better idea of what directions certain markets or certain instruments want to go in. And then combining that with the overall news and then being patient enough to see how the market is reacting to that news, is basically my strategy, basically my setup, basically how I believe a trader should be trading. But not everything works for everyone, right? This is a really good pullback here, right? It's definitely something we want to see. But now what we want to see is these orders here be swept, right? We want to see some more buying pressure come up and sweep some liquidity here. And if we can get that liquidity sweep with the candle confirmation needed, then we might have a really good short opportunity here and throughout the day. We gonna see. We're gonna be patient. Yesterday was a very impatient day. I had a specific setup and I seen price running away from me, man, and I'm like, damn, like, and I shouldn't be thinking that way anyway. So, once again, I've been humbled. And the only thing I can do is come back today and do my best to do what I should have did yesterday. And I haven't been able to stream too much just because of work and me trying to get rest. I mean, there's not really a lot of volume in the afternoons. The best time would be around this time, early mornings. And I don't be wanting to feel like I'm trading just so I can stream and basically force myself to trade when I know the time frame is best for me to trade. So as far as streaming goes, I haven't been just because I really haven't been trying to force myself to trade. And it's a bad thing because of my streaming, but in terms of my trading strategy, that's how my discipline needs to be. So I just been trying to focus on that. And if I do see a setup that is outside of like my normal trading hours, it depends on how good the setup is in my eyes and how the volume looks. Like if the volume is unnatural for that specific time frame, which in the past couple weeks there definitely has been time for that. But yeah, like unless I see something crazy and I'm able to stream, then I would. But lately I just been working and just been working it out. But yeah, I'm learning every day. I'm learning every day. I'm trying to just perfect my mind and my discipline when it comes to my strategy, right? Because that's the difference between a good trader and a bad trader. A good trader follows their rules every time, every single time, every single time. And I can only strive. I will be there soon, but I'm not yet. All right, y'all. Hold on. I'm about to use the bathroom real quick. I'm gonna put on a little instrumental. What we got? Let's YouTube this jam. We could just go. Oh, you know what? Let me let's watch Top Step TV, bruh. Let's watch Top Step TV as we wait for this little candle confirmation and this little rise to be over. Let's see what they're talking about on Top Step TV here.
50 points off of that. ES holding bid a little better.
All right, man, let's reclaim this zone here. Let's rally.
Get on these lows. Yeah. I'm getting on.
Come on.
Yeah, I'm good, Vince.
Vince, you going for the full gap?
I need a new pair of shoes.
Full gap? Oh, yeah. Okay. New pair of shoes, 74.
A Rolly. I gotta get one of them Rollies.
We take overnight view in the NASDAQ. You're going to be really sitting pretty.
Above what price, Hogue?
30,000. Right on it.
It's being very stubborn above 30,000. We did. We got the 30,004. Come on, Vince. We got to get those shoes. We're looking at Jumpmans. We're looking at Ferragamo. What kind of shoes are we talking here?
I could go for a pair of Ferragamos. I don't have a pair of those.
Well, let's see.
They're pretty nice.
This thing keeps cooking here.
Can you guys hear YouTube? Let me know if you can hear the stream that we're watching.
Come on.
Got to hold above.
It's the Bart Simpson trade.
What's the Bart Simpson trade?
Eat my shorts, man.
Oh, I like that. I've never heard that one before. Good.
That's what these markets do.
Oh, yeah. We'll cut the long. We'll turn around a little bit. Is this the pullback? What do you got for Delta Hook?
Yeah,
Plus 70.
3,500 positive in the S&Ps now.
Okay. Yeah, we're gonna monitor this. It's
Like how long it made
keep
your
our
resistance.
eye on it.
Look, I cut it. I realized that. I don't know.
Okay, I'm back, guys.
I'm not.
There was someone in my yard with a.
Can y'all hear me? think I'm having some technical difficulties here yet again. Let me know if y'all can hear me. Testing, testing. I think I'm having some technical difficulties here yet again. Let me know if y'all can hear me. Testing, testing. Okay, here we go. Look, here's this candle we were anticipating, right? We were anticipating some buyers to step in once we get to these, some sellers to step in once we get to this level. Okay, here we go. Look, here's this candle we were anticipating, right? We were anticipating some buyers to step in once we get to these, some sellers to step in once we get to this level. All right, we're gonna see how the next few minutes go by. We got a minute and 30 seconds. We got volume increasing here. We may have what we need here. All right, look, we got the delta increasing. So the delta shows how much more in control the sellers are than the buyers at a specific price point. Let's look back at the news here. What's going on? Any new headlines? No new headlines. Only that thing with Trump. Let's take a look at, well, we got 30 seconds. I want to see how this candle closes here and what our volume looks like. Yeah, I'm gonna get in for a sell here. We got about 9 seconds. I want a better candle. How does the 1 minute look? 1 minute looks good. We're gonna go with 2 contracts here for a sell.
Order filled.
And the stop loss is gonna be above this candle here. So we'll risk about 200. Yeah, we'll risk about 200 here. I think I want to set my stop loss a bit higher. Just somewhere I know where there's volume that can step in if we see price come back up, right? So looking at this tool here is showing me that volume is really high in terms of selling pressure at around 4160s, right? So I think I'll probably go, so I'm risking about 200 now, so that's about what? That's 10 points because I got 2 contracts, right? So 10 more points will put me at about risking 400. So risking 400 will put me at 41, what? 4172. So let's look at that here. 4172. Let's do 4172 even. 4172 even. Nah, let's go up. Let's go 4174.4. So that's exactly 20 points. So 20 points for 2 contracts is risking $400, and my stop loss is 4174.4. So 4174.4 is my stop loss. And I feel like I can bring it down a little more, right? Because if we get past this first area with sellers, then there's still another good supply zone where sellers can step in. Let's shorten that to about we could go 41.68. Let's go 41.68 even. So yeah, 41.68 even. That's about a good level in terms of volume that I feel comfortable with. Because if we get past this price point, right? If we get past this price point, that lets me know that the buying volume that stepped in was great enough to push past these previous lower highs, right? So if we're pushing past a lower high, that means we're creating higher highs. And if a higher high gets created above my stop loss, right? So if price comes above my stop loss and closes above it, then that would show me that my trade is invalidated, right? And that there's true buying pressure in the market. So we're going to keep the stop loss at about there. And we're on the 5-minute time frame, right? So the 5-minute time frame, the 5-minute and the 1-minute is where I want to do my entries typically. But if I can help it, I want to target much bigger zones, right? So on the 15-minute time frame, I'll probably be targeting somewhere around this area here. I'll probably say what? I entered at 41.54, so the closest whole point move would be about here. So that would be about a 30-point move. So a 30-point move with 2 contracts would be $600. I'm pretty sure. So I want to target this level here, but overall, I would like to keep a contract in the runner just in case price comes down to approach these new lows and possibly the all-time low since November of last year. But it all depends on how volume is looking at these price points. Right now, it's not looking too good, right? We're still seeing some buying pressure step in, so maybe it just needs more liquidity, right? Maybe I just got in at the wrong time. But we'll see, because we got the candle confirmation here, and then we had it have more volume than the previous candle before it. So that shows that there was some selling pressure, which is why I got into the trade. So if I get stopped out, that'll just mean that the buyers weren't finished. The buyers weren't done doing what they needed to do, and there weren't enough sellers that step in to push price down. Currently in with 2 contracts. on gold. Looking for the shorts here. Moves to the downside. Let's check the news. No new headlines here. What's on the calendar? MPC member. The Bank of England. Okay, so that's irrelevant to what I'm trading. So no new headlines supposedly coming out. Excuse me. Yeah, no new headlines coming out. So we'll just be going off of price action and volume. Bread and butter. Bread and butter. Okay, hey, it looks like these buyers ain't done, man. I may get stopped out of this trade. I very well may. Five minutes until this 15-minute candle closes. Getting some good selling pressure here.